It was the fastest ETF to grow to that sort of extreme that we've ever seen. And nothing else is even close. Like it's in a world of its own. Even still, there's been outflows, but everyone's talking about the outflows. If you told me an asset is going to drop 50+% and they were only going to lose like only, 12 to 15% of the flows are going to leave, I'd be like, damn, that's pretty good. A lot of people like to think like they figured out what's moving the market. We don't have a clear-cut example of like what the cause is. Jane Street and BlackRock, they're like good, like people we can blame. But believe me, if ETFs were the one determining where price was going on Bitcoin, we wouldn't be as low as we are. A market is a whole bunch of people doing a whole bunch of things.
C3, okay, a millionaire. I'm a young money millionaire.
All right, welcome back to the Daily Stack. Sean Ristow here, my co-host Avi Mash, and we also have James Seyffart with us from Bloomberg Intelligence, senior ETF analyst. This is now, James, the second time you and I have chatted. We did one live in Vegas, and now we're doing it here.
Yeah, exactly. Vegas feels like, I don't know, I guess it's almost about a year ago, but if you told me it was 2 or 3 years ago, I might have believed you.
Yeah, I know, right? It was one of those things. I mean, it's kind of crazy to think that we're going to be back out there here in the not so distant future.
Yeah, I'm still up in the air if I'm going to be able to make it or not, but we will see. I actually am going to Vegas for an ETF specific conference next week.
Yeah.
And if I'm being completely honest, I am not a fan of Vegas.
I mean, at our Avi and I, where we worked at a previous company, I spent a lot of time out in Vegas, and I got to tell you, we were up in Summerlin. We were not in the Strip, so it wasn't as, didn't have the full Vegas experience. But I got to tell you, when you get home, you kind of got to.
There's no place you want to leave more ever.
Yeah, it's like you got to take 2 showers. You just feel like, nasty. But yeah, I digress. So we're with you there on that. But no, man, great to see you. Thanks for coming back on the show. Quite a bit going on here in the Bitcoin overall market, I would say. Last night we had oil reach its fastest. It went the fastest, I think, grew on an open, or is what I saw. I mean, it was up 22% from the open at 5:00 Central.
Yeah, I think it was like the biggest move in dollars and percent that we've ever seen. If it holds, it didn't hold, thankfully, but they got up like $120 a barrel on the front month future contracts. So,
right, and immediately you saw Bitcoin sell off about $1,300, and then following that, you also had all over my X handle was people talking about how, this is the dump for, tomorrow. This is just the start of where it's going to go once the ETFs open. I mean, so, you've been tracking these Bitcoin ETFs for quite some time. What are your current thoughts on the current state of the market with IBIT, with all the other, Bitcoin ETFs? I mean, it was the fastest ETF that scaled to 100 billion. And now it's, Bitcoin's hit some rough water, but I mean, what are you seeing?
Yeah, I mean, I think IBIT technically intraday hit 100 bill, but it never actually closed at 100 bill. It was like 99 point something.
Right.
But we don't need to go. It was the fastest ETF to grow to that sort of extreme that we've ever seen. And nothing else is even close. Like it's in a world of its own. And even still, there's been outflows, but everyone's talking about the outflows, right? So there were outflows on Thursday and Friday last week. That amounted to about 600 million, which is a reversal of like the prior 10-ish trading days. Like it was taking in money hand over fist for the first time in a while.
Yeah.
But if you go back to 1010, when markets blew up, automated deleveraging across multiple platforms, some of those perp exchanges, it wasn't a good thing, right? The ETFs, granted, Bitcoin fell more than 50%, right? Or about 50%, depending on where you want to put it. And we saw outflows, and the outflows at their peak reached just shy of 9 bill. And everyone was talking about that. Obviously, the people who hate this space are jumping on Bitcoin's figurative grave, even though we don't need to go there. But if you take a step back, they took in like 30 billion from the tariff tantrum bottom until 1010. So like, yes, we saw 9 billion go out. Almost 2 billion has come back in the last like 10ish days. But in the grand scheme of things, if you told me an asset is going to drop 50+% and they were only going to lose like only 12 to 15% of the flows are going to leave, I'd be like, damn, that's pretty good.
Yeah,
those buyers have diamond hands if they're still hanging tough.
Yeah, no, for sure. Avi,
I had a question too, just like, and this is something we talk about all the time, is you think about the Bitcoin ETFs, and I'm in the space, right? And so everyone knows IBIT, we know the Bitwises of the world. There's a few others, call it a handful that people know. IBIT owns about like 70%, I want to say, of the volume, or they control 70% of the volume with like 66 billion roughly in AUM. At what point do you feel like this level of concentration becomes more of like a structural problem? Do you think, even with MSTR, them holding such a massive amount, and I just saw today, like Saylor may even, have more under management shortly. What are your thoughts in terms of like the structural risk of having so much with two properties here?
So we can go down like the tinfoil hat route, but like I would say there's a few things I would point out here. One, IBIT, it actually has more than 70%. If you go by just volume, not AUM, it's like they dominate. IBIT is the number one option by large. And if you look at options market, the other options markets on the 11 other ETFs don't even matter. Like they're not even, if I chart them in a stack bar chart, you can't see any other colors for the most part, most days when you look at volume and open interest. So IBIT is the number one product for trading, liquidity, you name it. There's plenty of other people using other products, some of the ones you mentioned. There's, like I said, 10 or 11 other products besides IBIT. And they all have they have hundreds of millions of dollars. They're not like just nothing funds. It's just that they're not, nearly $100 billion products, or nearly almost hit 100 billion. The problem with that logic, it's the same logic that a lot of people, if you listen to podcasts who don't understand finance, will say BlackRock and Vanguard own every company. Like they control the world, they control all these companies. Look at the top holders. Yep. And like you're missing, it's not the forest for the trees, but you're not understanding what these companies do. Like I own a bunch of ETFs that are Vanguard ETFs and mutual funds, and same with BlackRock. I have control over those shares. And so people like to say BlackRock is dumping. And it's like, no, that's people like me and you guys selling their ETF shares because they don't want exposure to Bitcoin, or maybe they want to get exposure somewhere else, or any host of reasons. Like a lot of people are using these things for the basis trade. So it's not necessarily just directional demand when money is coming in and out. So that's why you need people looking at this and being like, is this long-term directional demand, or is this people piling in to take advantage of a basis trade, which is like delta neutral? So when you look at it that way, it's kind of like, okay, yeah, these are getting concentrated, but at the end of the day, I'm not that concerned about it because it's an extremely efficient market. The end holders of these assets are mom and pop investors, institutions, endowments, the sovereign wealth funds. Like those are the people that own the Bitcoin at the end of the day. And BlackRock is beholden to those holders. It's not like they can be like doing whatever they want with this Bitcoin. The same goes for every other ETF. MicroStrategy, if we want to go down that route too, it's a little bit different. It's not as clear cut, but again, the same thing. The MicroStrategy shareholders are the ones that control it. Granted, the board can make decisions. It's ultimately voted on. Saylor has like a lot. He doesn't own complete control voting power, but he has a lot of sway, way more than anybody in the ETF world does.
Mm-hmm. I mean, when you look at the ETF space, it's interesting what you just brought up, because it's something that I say all the time. When you go on any of these social media platforms, it's, oh no, BlackRock's selling, Bitwise is selling. What was the other one? That Jane Street is rigging the market. Like, I mean, take your pick of whatever comes for that day of why people think it's dumping. But at the end of the day, the truth is, like, these are individuals that are making decisions, or they're holding it in some type of basket or portfolio that, the model says, hey, we're over allocated, things like that. But I guess where I'm going with all this is, what have you been seeing on that front? Are you seeing more on who is the actual underlying user really purchasing these ETFs? Is it more retail? Is it more institutional? Are you seeing more allocation than you did before? Tell us a little about that.
Yeah, good question. So the real answer is the one way that we can see who really holds these things is via 13F filing. So institutions of a certain size and a certain amount, you name it, they're required to disclose what they hold. It's meant for equity. It's meant for stocks.
Right.
But ETFs kind of fit into that. So we can actually see ETF reporting, which is a good thing for us and for me. And before I even get to this, I do want to point something out. A lot of people like to think like they figured out what's moving the market, right? One, the market went down and we don't have a clear-cut example of like what the cause is. So Jane Street and BlackRock, they're like good people we can blame. We don't have an SBF this time. We don't have like a Luna, a Terra that we can say like this is exactly what caused things to blow up. So I think part of it is people just trying to ascribe blame somewhere. I mean, who knows? I'm not going to pretend to say that it's all of it is 100% not happening. It could be happening in the fringes, but believe me, if ETFs were the one determining where price was going on Bitcoin, one, we wouldn't be as low as we are, and two, I would be. I know enough about what's going on and can read the tea leaves pretty well that I would be a lot better at predicting what's going to happen next. So they're a piece of the market, right? Like a market is a whole bunch of people doing a whole bunch of things. We can see more detailed stuff on like on-chain metrics. There's plenty of on-chain analysts that are way better than me that can tell you that like the OGs, the whales were selling anytime it was over 100K, even into like the $70,000 mark over the last few months. They were still selling on a net basis. So Sharoon is the one that's on the back end doing all this stuff for me. But we look at all of the 13F filings on every individual Bitcoin ETF, and we try to understand what the holders are. We look at the changes every quarter. The problem is we can see it on quarter end, and we get it a 45-day delay, which to anyone in crypto is like an absolute freaking eternity because you can see when shit is moving real time on chain, right? But
right.
Essentially, and so we have data through the end of the year, so through the end of 2025. And we know that investment advisors, the people that are managing money for everyday mom and pops or high net worth people, they were net sellers. There were plenty of buyers, but on a net basis, they were sellers. Another big seller, hedge funds. Hedge funds were the biggest buyers initially of the ETFs, and they were doing the basis trade. They were not net long. So everyone's like, look at these massive hedge funds buying all this stock of the ETFs. One, they're market makers. So they have positions where they're just obviously bidding and selling. They usually don't really have price exposure to these assets. But they're also doing basis trades where they're going long the asset, the ETF, and shorting the futures market. And if there's a difference there, they're earning that return net of whatever fees they're paying. And there were times like at the end of 2024 where like that was like a 20% return, like virtually risk-free. So tons of money piled in. A lot of that money came out in early 2025. I think some more of that money came out in the end of 4Q 2025.
There was a lot of that in the grayscale.
Exactly.
I mean, that was so heavy on that basis trade. Like, because some of my friends were telling me, they're like, holy shit, look at this opportunity right here. And I'm like, you better know what you're doing. Otherwise, you're going to get whacked real quick.
Yeah, so they know as long as the basis risk is essentially that the underlying ETF or the futures don't correlate to each other, which hasn't happened. The ETFs have operated essentially flawlessly as far as I'm concerned. And I think so that basis yield dipped pretty low. So we're like shy of 5. We're below 5% right now. Last I checked, I would have to look again, but it used to be consistently, we would spike over 10%, get to 20% at times. It very rarely spikes that high now. It's much more compressed. So I think even more money has come out in the fourth quarter from anyone that was trying to play that sort of basis trade. But on the net basis, like there's still, the other thing I would say is the numbers I'm talking about as of 3Q, so September 2025, we knew 26 to 27% of the holders based on these 13Fs. So the rest is retail or overseas people or institutions that aren't large enough that are required to follow 13F. That number went down. We only know 24%. So like everything I'm talking about is like, I can only see like a little bit of what's going on, and those are the institutions. The vast majority of it is likely still retail.
Yeah. And how much of that is leveraged that's the thing that I think people aren't paying attention to is, so you have these movements in the market like yesterday. Okay. Take oil, take bonds, take, futures on equities. We were down 1,100 points on the open yesterday. I mean, it was like pandemonium. And now, we bought back. But where I'm going with this is like Bitcoin, now that it is part of the ETF, it's gonna fall into the same bucket as all these other assets. When it's a risk off game, I don't foresee people buying Bitcoin ETFs. You know what I mean? Like, is that what you're seeing on your end, or?
I mean, partially. I mean, one of the notes I wrote that goes along with what you're saying is I was looking at how correlated Bitcoin and software stocks were towards the end of the fourth quarter and towards the start of this year.
NASDAQ? Yeah.
Yeah. It was even like the NASDAQ
IGV
last year, but it was IGV, which is like a software stock. So it only holds the software names. They're getting crushed by this AI stuff. And Bitcoin was just going down with it. And there was two things I noticed. One, obviously, if you look at different assets, whether it's NASDAQ at times, sometimes it's the S&P 500, sometimes it's gold, like it's not actually correlated over longer time periods with any of these things. Aside from just generally, it is considered a risk asset. It's kind of broken down a little bit with the software stuff, but still somewhat correlated. The one thing I would say is like people were buying hand over fist. They were jumping in, trying to call the bottom in software. That was not happening with the Bitcoin ETFs. And I think largely it's because people know this asset is subject to massive downturns. Like 70% is somewhat routine in a 4-year cycle for Bitcoin. And I think people were just waiting for something to signal that we're near at least a near-term bottom. And there was nothing showing that. There was like a couple higher low that happened, and then another higher low that happened like after the US attacked Iran. And I think after that, people were like, okay, I'm going to buy in again and try to call a bottom. And I think the last 2 days of last week, we saw some people some money come out. But the other thing I would say is like, we're talking about this and obviously it was a sell-off, but like, if you look at the close on Friday and you look at the current price of Bitcoin, it's within a couple $100 right now. Like everyone's talking about the run up that went over 70 and things like that. But for the most part, like it's still kind of flat.
Right.
So like we're trying to pick things. And the other thing I would say when I was looking at those software and Bitcoin correlations is I tend to view Bitcoin as a potential store value asset, right? That's the way I view it. I think it has a lot of the criteria that would meet for something to potentially be viewed as a store value asset. Obviously, I'm assuming you guys, a lot of people in the Bitcoin space see it that way. They like it. It's actually better than gold in many things. One thing it's not better than gold is its price stability. Right? It's very volatile. And the fact of the matter is, like, even BlackRock is pushing this as like a hedge against currency debasement, store value asset, all these things, like big institutions. Doesn't matter what we think, what different institutions think. The market treats this thing like a risk asset right now. Could that change years from now? I don't know. I'm not going to pretend to say it definitely will, but like I think it could. But right now, it doesn't matter. As you're saying, this thing is a risk asset. There is some bottom buying. There is some people coming in that are long-term buy and hold investors to the ETFs. We're seeing that with flows. But a lot of it right now seems to be more short-term, like calling tactical bottoms, selling rallies. We're in a bear market, and people trade bear markets differently than when they trade bull markets. They're buying low and trying to sell after a rally. So it's harder to get above those, key technical levels. And Bitcoin itself.
I mean, how many people have you ever seen where trying to call the bottom? Like, I can't tell you how many people I know that have just gotten toasted because they're like, oh, this is the bottom. We're down another $5,000. Well, maybe this is the bottom. All right, well, keep going. You'll catch one of them.
I'm curious, what like catalysts do you still see that are out there? Because the ETFs obviously were big. I think we got the Clarity Act coming up. But like, what does bring retail back? Because maybe it's a microcosm amongst my friends, but they're not buying Bitcoin necessarily right now. I'm doing my best to tell them to, but at the same time, it feels like a lot of retailers are still on the sidelines. And with AI coming up and potential people losing jobs, even more liquidity is off the table potentially. So curious what you're seeing and thoughts overall there.
I mean, the first thing that comes to mind is Clarity Act. Like, so regulatory certainty in the US. Granted,
anything except clear.
Yeah. Granted, that's not going to be hugely impactful for Bitcoin itself, more just crypto as a whole. These other coins will probably benefit more from that. But I think anything that'll stabilize the system and provide upward momentum would help Bitcoin itself. Like where crypto goes, Bitcoin goes, as much as a Bitcoin maxi might hate to say it. Like there's correlations that go on there. There's plenty of other things. Institutions actually adopting this. Morgan Stanley's launching Bitcoin, Solana, and Ethereum ETFs. Like these institutions they're still building. They're still like doing things in the back end. They were building for years now, and they're trying to get in. We're going to see more institutions come in. So you see governments taking it more seriously. Who knows? Honestly, the people
NASDAQ.
What was that? Sorry.
NASDAQ just announced this morning with Kraken doing stocks.
But the problem is, like we're going in one direction right now. So you need some sort of mega catalyst to kind of push it in a positive direction. Even then, we're kind of in a bear market. So even anything could be like a bear market rally, right? So grand scheme of things, sellers that are thinking about selling, short-term holders need to be washed out. A lot of them, from my point of view, kind of have been. But there's a whole bunch of things that could be catalysts forward. But like this thing trades on a more Bitcoin trades like so technically, I'm not a technical analyst. I'm not somebody who's like a diehard believer. But like this thing trades like, you look at 200-day moving averages, you look at all these different technical tools, and Bitcoin trades more than anything I know along those lines. Partially because it's harder to know what the fundamental value of Bitcoin is. It's not like a stock. I'm not actually able to do a discounted cash flow analysis to understand like how much those cash flows might be worth and all these different things. It's a little harder to come up with an actual hardcore value. But yeah, I mean, there's a whole bunch of things, but coming up with more quantum secure ways to do things that might alleviate some of the institutions that are hesitant. But I will say a lot of the advisors that I'm talking to and people I've been talking to that have been interested in this space were like, I'm not doing it now. Like I wasn't getting interested now. And then all of a sudden it's down and they're second guessing it now. They're taking a second look at some of these ETFs to put in a portfolio. They just didn't want to do it when Bitcoin was 120K. Now it's like, okay, maybe we can actually put these in a client portfolio for anyone who hasn't. So I think one of the things I've been saying about the ETFs and this institutional move, I thought they were going to dampen volatility a little bit. If we don't go any lower, maybe they have. We didn't have a blow off top, but like if you're going to put a 3% allocation in a client portfolio, if you're gonna set it up and say I want a 3% allocation, if the price goes down, you're gonna buy, and if price goes up, you're gonna sell. So if it goes from 3% to 6%, you're gonna sell off a little bit. If it goes from 3% to 1.5%, you're gonna buy back a little bit. And I think that rebalancing stuff could limit the tails of what could happen. Obviously, assuming nothing crazy happens elsewhere, but with the conflict in the Middle East, who knows what's going to happen to risk assets? So I won't pretend to know what they are. But like, I think long-term institutions, advisors, people putting money to work in the spaces in a long-term way will decrease the volatility of Bitcoin's price.
I mean, I think, a 3% allocation to a portfolio is really not that much in the grand scheme of things. And so when you look at things overall, my question to you is, do you foresee, it's been heavily correlated to AI, and with AI being a risk on obviously what's going on in the Middle East, to me, it just seems like the only way we're going to get a path forward here is people want a surety. They want to know that, hey, shit's not hitting the fan all over the world. And that being said, now we'll come back into these more risk-on assets, which for the boomers and others that don't trade in the spot market, they're going to use ETFs.
Yeah, I mean, I tend to agree. I mean, you just look at what's going on with risk assets overall. They're all going down. So as soon as like potentially some of the stuff in the Middle East is cleared up, maybe that could be another catalyst that could happen. But at the end of the day, like if you look at those fear and greed indices, they're pretty much showing a lot of fear at this point. And there's not much else you can do about it. And like I said, market participants, for better or worse, view this thing as a risk asset. And it's correlated to software stocks and things that are getting disrupted by AI, which is ironic because another catalyst could be all of a sudden like a bunch of these AI protocols or agents start using things like stable coins and crypto and Bitcoin. It might be like another positive catalyst. Obviously, there's plenty of people out there saying that like cryptocurrency, Bitcoin, stable coins, you name it, make more sense for agents to use. But we're still in like we're not even in the first inning, I would say. We're in the pregame of seeing if that actually plays out. But like that's another catalyst I would point to. It's just, we're in a bear market.
I do think you're right there. I think stable coins will probably be the currency. It is funny if you ask like any of these AIs what the best form of money is, they tend to go towards Bitcoin. So I don't know if that's just based off my chat history and they're like, all right, he'll like this answer, but that's what pops up for me.
Pops up for me too.
Yeah. The other angle there too is like in this world of AI where even Bloomberg, for example, I saw some tweet the other day that someone created the new Bloomberg terminal, right? Obviously you guys have proprietary things. It's not going to come close to it, but people are creating these like chatbots that are ultimately doing that. But where I'm going with this is I think, in this world where anything can be replicated and duplicated so quickly, Bitcoin is kind of the one thing that can't be truly affected by AI in some ways, right? Because there's 21 million ever. You're not going to go around that.
So it is kind of 20th million one.
Yeah, only 1 million left.
Yeah. So, I mean, there's an angle there, I think, too. I got to wrap my head around what I'm trying to say here more. But I think it is kind of the one central truth here that still remains. It's like, all right, this is not like something you can just duplicate or replicate and copy the new Salesforce, for example. Like, this is something that's going to stay Bitcoin, and I think it will, bubble up to the top eventually as people start to realize that this can't be manipulated as much.
Yeah, I will say a few things. One, I've been at Bloomberg 12 years, just about, and every year there's a new Bloomberg killer. I will say this AI side of things, it seems a little more serious than anything else I've been paying attention to since I got here. And I would also say we're building our own AI tools internally. There's literally a function that is basically a Bloomberg chatbot, and they've been dramatically investing in and pushing it forward. So it's not like all these other companies are like taking this lying down, is what I would say, first of all. And then second of all, I would say on the stablecoin side of things, I do think one of the things that has happened with stablecoins, and this is my view, and this has been my view for a while, stablecoins have sucked out a lot of the medium of exchange potential use cases from Bitcoin and other cryptos. Even if you think the dollar is worthless and it's going to zero, it's going to be fully debased, it doesn't matter. The world market's still pricing the dollar. Everyone's using the dollar. That medium of exchange narrative on Bitcoin has definitely been hurt by the use of stablecoins. Could that change? I don't know, 20 years from now, maybe. I'm not going to pretend to say it, but like that is definitely something that happened.
Well, it goes back to trust. And I deal with this with my day job, like with working with banks and credit unions. It's 100% trust. And if they already trust, these institutions, quote trust, then they're going to use the tools that they give. They're not going to use some brand new, like, most people still are not even familiar with how Bitcoin works, how a blockchain works, let alone how finance works. And, you're trying to shove finance, tech, and this whole new structure into basically someone's head. And they, as I said, they don't understand finance, and let alone they don't even have investing. They're not investing already. So I think it's, from my point of view, I think you're going to see on the back end, I think you'll see stable coins more for settlement. And then I think, Bitcoin obviously started out as a currency, store of value now. I think, how long's gold been around? A long time. It's going to take...
It's been used as money for at least 5,000 years, if you can go back, or at least a store of value and had value.
Right.
So,
right. So...
What kind of, I don't know if you want to go on record here for predictions for how we end the year for 2026. I know a lot can happen. And as you said before, a day is a month in Bitcoin, a month's a year in Bitcoin. So like anything could happen. But from what your data is showing, do you think we recover this year? Or you think 2026 is kind of going to stay as a bear market for most of the year?
I'm not really allowed to even say that, but I'll say a few things on it. First thing, actually, there was a thing I wanted to say to your question last time about Bitcoin being a thing all its own. And I was thinking about the woman at the Financial Times that was saying her teeth are rare. I will say, there's like people I work with at Bloomberg view it as like there's too many other cryptos and Bitcoin's not unique. And so it loses its store of value and scarcity because there's so many other cryptos, which I do not ascribe to whatsoever. So there are plenty of people in the market who do not believe Bitcoin is scarce or valuable in any way whatsoever. So yeah, I just wanted to say that real quick. And then what was your question again that you just asked? Oh, where are the markets going?
Yeah.
I would say I pay attention to the ETFs more than anything. I look at on-chain metrics. I think bear markets tend to be measured. Most people think about them in price and drop-offs, but they can also be measured in length of time. Like for the most part, you tend to need to bottom and then go sideways for a while before anything like Bitcoin tends to become a coiled spring at some point if you're a long-term believer in it. So I think one, you have to consider the fact that it just takes time to wash everything out. And the other thing is like, for better or worse, with all this institutional adoption, with the ETFs, this has become more and more tied into the traditional financial markets and risk assets. So like, I think Bitcoin has a lot of idiosyncrasies right now. So like it beats to its own drum, it'll go up and down on its own. But if we have massive like risk off selling
like yesterday.
Like it's going to hit Bitcoin. Like, so like if the S&P 500 is going to go into a bear market because of whatever's going on in the Middle East and oil goes to $200 a barrel, like, don't be surprised. Yeah, theoretically, Bitcoin shouldn't be affected by that. But if you have the same holders, we saw this with like the sell-off in tech at various times in 2020. Like, it doesn't matter if it should or shouldn't be impacted. If somebody's holding assets that are going down a ton, they're going to sell whatever they can to meet margin or just to go to cash. And correlations go to 1 in bear markets. So I would say like those are the ways that I tend to think about this, and it's been ingratiated in the financial markets. So, and then the final thing I'll say, go ahead. Sorry.
No, I was just going to say, in the final, the one thing I'll say on that is like, and most people aren't even trading this themselves. They're holding it. If you're holding the ETF, it's most likely in some type of model, in a portfolio.
Yeah, there is a lot of models that do hold this. Ironically, the Bitcoin ETFs aren't actually in that many models from what we can tell. So there's only a small so ETF model portfolios are like these portfolios where an advisor will sign up to be using BlackRock's model or some other active manager's model, and they put these ETFs in there and they just do it for you and they maintain it. There's very few models out there that hold the Bitcoin ETFs, but they are becoming, those models themselves are massive. We're talking hundreds of billions of dollars that are tracking model portfolios. So yes, 3% allocation, like you said before, isn't a lot, but like across trillions of dollars in assets, it's actually pretty meaningful. And then the other thing, and the other thing I would say is like, I said this already, but like if all the Bitcoin holders held up as well as the Bitcoin ETF holders did, things would not be nearly as bad as they are. So a lot of people were saying that the Bitcoin ETF coming online was going to be a lot of soft hands, and it's pretty much been the inverse, according to the data right now. And the other thing I'd say is like a good market of growth, whether it's an underlying asset or an ETF AUM, it's usually like, it's very rarely a straight line up and to the right. Like there's usually a thing where you go 2-3 steps forward and go 1-2 steps back. And that's showing healthy growth. Like the market's correcting itself, it's getting back in line and things like that. So I'm not that concerned about it right now.
Yeah, people that want like this parabolic growth and just think it's going to go from 100 to 200, like, come on. Like, even if we do that, we're coming back down just as hard.
Yep.
Because just remember, like, people want to make a profit. Like, not everybody's buying and holding this forever. Like, that's just the God honest truth. And they're going to come in, they're going to trade it. And part of trading, you got to take profit at some point, you know?
Real quick, I got to hop. I told Sean I'd stay on until 2. And it's
let's wrap it. I didn't even look at the time, actually.
Yeah, you're good. You guys keep going. But thanks so much, James.
Yeah, thanks. Great to meet you. I would say the other thing I would say real quick.
Yeah.
Is like all these calls for multi-million-dollar Bitcoin and like it happening in a short time period or all these different things. Like high likelihood if that were to happen, like I'm American and I don't want that to happen, because for that to happen, it means the dollar got absolutely obliterated or something really bad happened to like the current financial system. And I know some people kind of want that, but as somebody who lives in this world and, you know, I don't know, that's kind of scary. So I'm much more okay than, you know, the crypto natives who are like, if they don't get 5% a day, they're screaming. I'm okay with 5 to 10% a year in my, you know, my equity exposure and things like that. I'd like more if I held a bunch of Bitcoin, but you know, that's just not the way the world works.
So James, if people want to reach you, what's the best way to reach you?
I mean, if you have a Bloomberg terminal, just shoot me an instant Bloomberg, an IB, or an email. That would be the easiest way. But obviously I'm pretty active on Twitter, or X, I guess I should say. So if you don't have that, I'm on Twitter and I'm a little bit on LinkedIn, but really X or Twitter is where you can find me. I can't publish everything I'm doing on the terminal and for our clients, but I do share charts pretty frequently and what we're writing about. And yeah, that's where you can find me.
Yeah, we gotta get your sidekick Eric on with you. He keeps eluding us.
Yeah. Eric is way busier than I am. And he's also technically my boss and kind of got promoted up the chain. So he's got a lot more duties than just covering these markets than I do.
Oh, really?
Yeah, he's got his own hour-long TV show that he does every week. A lot of work goes into that. He's got his own podcast that he does that's an hour long every week. So I don't have to deal with any of that, fortunately, I guess.
How long has he been there at Bloomberg?
He's been here since, I don't know, 2000.
All right.
20-something years. At the very least, it's 20-something years.
Nice. That's great. James, great to have you on. Thank you for always sharing your great perspectives on the market, where the market's going. We will definitely be bringing you back here in the near future, but thanks again.
Yeah, thanks for having me, Sean.
You bet. All right, that wraps it up for this week. We have an exciting guest coming next week as well. And then the following week, I'm actually going to be out on vacation. I'm going to the most miserable place on earth. I meant the happiest place on earth, Disney. So, but yeah, stay tuned. Thanks again, James, for joining us. And we'll catch you here tomorrow. Same time, same place. Thanks, everybody.
Thanks, Sean.
Take care.